Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Cucchiara.
Welcome in. This is Joe Cucchiara with Real Estate Radio Live, our podcast series. Glad to be back with you. And we're going to have a great show in store for you in just a couple minutes. I'll introduce my guest. Just a reminder for those just checking in, maybe for the first time, thank you. Be sure to remember, if you need any help on financing mortgages at all, purchase, refinance, visits, you can always reach me at 408-838-9060 or go to reradiolive.com. Also, do me a favor, give us a review. Let us know how our podcasts are doing. You can do that also by going to reradiolive.com or to iTunes and let us know what you think about this show. All right, let me introduce my guest. I've been talking to him for the last couple of months. Great to finally have him on the podcast. Reed Goossens is an investor and host of Invest in U.S. podcast. Good to have him here with us today. How you doing, Reed?
G'day, mate. How's it going? Thanks, Joe, for having me on the show.
I'm excited. Yeah, we spoke a while ago, and it's always good to talk to someone that's in touch with the international markets, what's going on. Today we're going to talk about international investing and the opportunities of investing in the United States. And, you know, in the Bay Area here, Reed, we have, it's an interesting dynamic in that we have a strong business environment. Prices of homes and real estate are skyrocketed, which, you know, you're familiar with a lot of that as well. But I think to most people, the great thing about the podcast, it gets out to those all over internationally as well, and that's the thing that I'm excited about. We're getting bigger reach. So good to have you on. And if we could, why don't we get started, Reed? If you could tell the listeners a little bit about your background and then your current roles and responsibilities, and, you know, primarily where you're spending your time today.
Sure thing. Well, first of all, thanks for having me on the show. I'm really excited to be here. For your listeners out there, as you can tell, I'm not from the United States. I'm from Australia, and I moved to the United States about 5 years ago. And when I first moved here, I moved here for my fiance. We're now engaged, but I found a passion for real estate investing. My background's in structural engineering. I was a structural engineer for 9 years. I worked all over the world, including New York and Los Angeles, which is where I now live. However, I've quit that job, and now I focus on real estate investing full time. But when I first moved to the United States, Joe, I saw that the barriers to entry here are a lot lower compared to where I was used to in Australia. And, you know, I could go pick up a $50,000 or $60,000 duplex, and it could, you know, have a gross income of, you know, $1,500, and that was just sort of blew my mind.
Right.
The multifamily space in general, Joe, was something that was a little bit foreign. It was foreign to me. Not that it doesn't exist in Australia, but on the sheer size, like you can go out and buy 50 or 100 units or 200 units, was just, it blew my mind. And we'll talk a little bit about, you know, why that's different compared to Australia. But essentially, I fell in love with the cash flow, and I fell in love with controlling my own investments. You know, I could put my money in the stock market, and could have someone else control my investment.
Right.
But, you know, with multifamily investing, I can change the income of the property, and by changing the income of the property, I can, you know, change the NOI, and that in turn increases the value. So I increase cash flow, but I also increase value. And, you know, when Brexit happened a couple of months back, if you had your 401k in the stock market, would have taken a hit. However, you know, my rents didn't change with my tenants in that time. So that's a little bit of a nutshell what I am and who I am. I love investing here in the United States, and I've been living here for the better part of 5 years now, and going to continue to live here into the future.
Very good. You know, something you just said, I want you to touch on a little bit, excuse me, a little bit more if you would, Reed, because what the majority of our audience, the responses we get, emails, calls, is really people interested in investing in general. They're,
right.
they have a hunger for it. They have an excitement, a new sense of energy for it. And I think is some of the things you just mentioned are the reason why. And that is, it's something that's yours. You could touch it, feel it. You know where it is. There's so many different things you could do with real estate. I mean, you got to leverage it. A certain amount of time. If equity grows, you could do some creative financing. You could do different things with it, other than the stock market, other than the market, and things that you really truly have control over. Talk a little bit about, maybe just spend a minute or so to those listeners again, because I know it's a huge audience. Maybe someone's just trying to get started, Reed, or maybe they're an expert at it and they want to take it to the next level. What would be your advice for both those people? Someone that's just a little nervous, they want to start investing, they know they want to. What would be the advice for that person? And then what would be the advice for the person that maybe has been doing this for 15, 20 years and wants to take it to another level, maybe buy, multiple properties or invest some big money in?
Yeah, good question. The first person, the person who's sitting on the fence about, wanting to dip their toe in the water. Well, the first thing I'll always say to them is a fool and their money are easily parted. And what do I mean by that? I mean, go out and get educated. As I just mentioned in the introduction, I was sort of talking about, stock markets, and we're all blindly giving it over to brokers who invest the money for us and they take fees and blah, blah, blah. I think at the end of the day, you've got to have a hunger to want to have something different. And it's unfortunate that real estate is classed as a different asset compared to the paper assets we've been sold for the better part of the last half century. So get out there, listen to people who listen to this podcast, get to seminars, get to local real estate investing clubs. There you're going to find people who are boots on the ground in your local market or a market that you want to invest in, and just learn from them. Be around other people who are successful in investing, and just by doing that, you're going to absorb so much information. And I'll challenge all those newbie investors out there. If you go to one meetup a month, I bet you within 6 months you would have met someone, or you would have changed your mindset to the point where you'll be ready to take that next step. So that's for the newbies. On the more advanced people who are looking to scale that real estate, it's pretty much the same sort of thing, but I would probably take it one step further and say, if you are in that space where you need help with mindset or you need help with scaling your business, a mentor is very, very important. It was very, very critical in my career, and you wouldn't have had the success that I've had in such a short period of time without my mentor. So they're the two bits of advice that I would give to the two different types of people who are out there listening right now. Very
good. What about the other thing that comes up a lot, Reed, and I want to have you address, because you're an expert in this, you've been doing it a long time, you see this thing globally as a lot of people don't, so you have the advantage of that. What would your comments or thoughts or feedback be to a person or a group that says, I might put things on hold for a while. I'm nervous about the run-up of prices in certain parts of California or other places in general. Maybe just in general, they're nervous right now. Is it always a good time to buy and sell, Reed, or is there times that you recommend or you think, put the brakes on a little bit, or let's see what this year happens? Of course, we have a big election year. What are your thoughts to the person that are having those thoughts and those questions to you at that time period right now?
Yeah, if we're talking specifically about the United States, yes, there's always going to be peaks and troughs. That's how you make money in real estate. That's how real estate works. In general, when someone says to me, the U.S. market or the U.S. real estate market is X, Y, Z, I sort of tend to laugh, because the United States is made up of 400 metropolitan statistical areas, MSAs. Within those 400 MSAs, there's submarkets. Within those submarkets, there's suburbs, and within those suburbs, there's north, south, east, west. You can always find a deal if you have good deal flow. Now, if you're a retail buyer, on the other hand, it may be a little bit different. But if you're a true investor and you know how to find, you network, you've got a strong network of people, and you know exactly what your criteria is of investing, whether it be value add, whether you're going to flip something, whether you're going to get creative on the purchase, you always make money when you buy, not when you sell. And if you're buying right, you will put yourself in a good space to create, whether it be passive income or whether it be a profit on the end sale if you so want to flip a property. But yes, there are external factors like increasing interest rates, again, new presidential elections, they all play into this sentiment of being a little nervous and people sort of sitting on the fence. And again, goes back to making sure you're surrounding yourself with credible people who can advise you on what to do next now that's coming to the end of 2016 and what's happening moving forward into 2017 as interest rates potentially will more than likely go up. And how does that affect your investing portfolio? Yeah,
I think that's well said. We just have a couple minutes before our first quick break here, and we're going to get more in detail when we come back from our quick break in terms of just international, people investing in the United States. We're going to get more into depth into that. But before we do that, just one last thing, which you just mentioned. I think it's more important on when you buy or the price that you buy versus when you sell. Isn't it also, but this is just my experience. I've invested in real estate as well, and certainly not at the scale and the level that you have and the people that you mentor and teach and advocate. But, a lot of the times that people get burned is when they're forced to sell for some reason, too, has been my experience. Usually if you buy, even in, let's just call it super high markets, and we have peaks and valleys and ebbs and flows like you had mentioned, Reed, but I think most of the time people get in trouble when for some reason they're forced to sell and maybe take a loss or not sell when they want to. What would you say about that?
Yeah, and the force to sell comes through a couple of things. You've got to buy right, but you also got to finance right. And financing is a huge key, particularly from the residential space, because the bank looks at you as the borrower rather than the asset to pay back the debt. So if you, that's where I value cash flow, and maybe some of your listeners just value residential, and that's fine. But you have to be very cautious in the climate that we are now. Short-term loans can be of an issue. Variable loans can be of an issue, and that's when I see people also get into trouble. Always when they my loan's becoming due, and I can't pay it off, and they've got a force to sell at a loss. So it really comes down to the financing right and understanding what you're getting yourself into if you're purchasing a property, particularly on the resi side, and how that's going to affect you and your exit strategy, because it's very, very important.
All right, we're going to take a quick break. When we come back, we're going to continue our conversation with Reed Goossens. He's a real estate investor and a host of Invest in the U.S. podcast. Great wealth of information. Remember, if you need any financing, mortgage needs, purchase financing, I can help you with that. Contact me at 408-838-9060, or you could always visit the website at reradiolive.com. We'll be back in a couple minutes to revisit our conversation with Reed.
For more information on today's program, visit reradiolive.com. That's reradiolive.com.
Hi, this is Joe Cucchiara of Real Estate Radio Live. Thanks for tuning into our podcast. We are your go-to resource for all aspects of real estate, including buying, selling, refinancing, building, and legal and tax advice, and much more. You can subscribe to Real Estate Radio Live podcast on iTunes and Stitcher to listen to an engaging discussion about anything and everything real estate. So make sure you get our app, RE Radio Live, in the iTunes store to follow the show.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit reradiolive.com. That's reradiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Cucchiara.
Welcome back in. This is Joe Cucchiara with Real Estate Radio Live, the podcast series. Today we have an excellent interview, and our guest today is Reed Goossens. He's a real estate investor and the host of Invest in the U.S. podcast. He's an expert teaching people really internationally how to invest in the United States and much, much more. Wealth of knowledge, and it's good to have you here on the show today, Reed.
Thank you so much for having me back.
Well, Reed, before we're going to dive into really some specifics now of reaching out to those outside of the United States and how they can invest in the United States and why it's a good idea and all the things that you're going to be talking about. Before we do that, I'll give the information out at the end too, but if someone wants to reach out to you or they're interested one way or another, you have a lot to offer. What is the best way for them to contact you?
Sure thing. You can hit me up at my email. It's info, at rsnpropertygroup.com, and that's just my investment company. You can also check me out on iTunes and Stitcher Radio with Investing in the US podcast, and you can search my name, Reed Goossens. And it's spelled a little weird, but it's Goossens.
Very good. We'll give it out towards the end, too. So let's dive into the real passion and the knowledge, the information we want to get out to. This podcast is listened to if it's growing rapidly, and it's the exciting part is about podcasting, as we mentioned early on, Reed, is that people are listening to it all over the world, where live radio is fun and it's great. I enjoy it for one concept or aspect, but the great thing about podcasting is, as most people know by now, is you listen to it your time, your convenience, and all over the world, and you're not stuck in one location. So that's what's great about this information, to get that out. So with that said, someone listening to this outside of the United States, give us kind of an overview of what you would say to that international investor thinking, again, I want to invest in the United States. I'm not quite sure how to take the first couple of steps. I don't know who to trust, or is it a good time to invest? You can talk a little bit about that.
Sure, yeah. Well, first and foremost, the reason I started my own podcast, which was Investing in the United States or the US, was to help educate international investors about the pitfalls. Because when I first moved here, there was a lot of pitfalls. I couldn't get access to financing. I had to start an LLC. There's all these sort of hoops I had to jump through. And through jumping through those hoops and figuring it out on my own, I then created, this sort of how-to guide to get set up. Because a lot of international investors, they come here for a couple of reasons, Joe. The first is stable government. The second is that you have an investment in US dollars. And the third is that it can produce some pretty good yield if that's what you're looking for. If you're looking just to park your money in a large mansion, that's fine as well. But I see a lot of international investors now wanting that yield to get their money working for them out of their home country. But before they just dive into saying, hey, let's put an offer in an apartment building or whatever it might be, you've got to just pump the brakes a little bit. There's a few steps that they need to get set up before they can just go out and actively start investing. And it takes a period of time. It takes a period of about 4 to 8 weeks, depending on who you work with. And the steps are that you've got to get all your back end set up. So what I mean by back end, you need to get your LLC set up, your limited liability company here in the United States. That's just an asset protection vehicle, as you know, Joe, and I'm sure you probably talked about it. But it's just a way to start, setting up some roots here in the United States. The second thing that international investors have to apply for is an ITIN number, an individual tax identification number, and it just sort of says to the government, hey, IRS, I want to invest here and I want to pay taxes. And trust me, the IRS is more than happy to take your money. So that's the second thing, but that typically doesn't have to be done until you've actually identified the asset in which you want to purchase. The third thing is U.S. bank accounts. Now, this has become the U.S. government has tightened the straps around this a little bit more. You have to actually come to the United States and visit and be a physical presence at a bank to open an account. You can't just open any account from abroad. So anyone I do talk to and they're thinking about investing here, I always say to them, are you thinking about coming and looking at the investment before you buy it? And 9 times out of 10, it's a yes. So when they come, they will then go and set up the bank account. Once they've set up the bank account, they want to then fund the bank account with money. And then there's foreign exchange services that I offer to help international investors get their capital legally into the United States to then go and purchase a property. And so they're the sort of 4 or 5 things that need to be set up before you can then start actively looking and submitting offers and all that good stuff.
Very good. So do you then, when someone contacts you, Reed, you have the benefit of do you help them through these steps? Do you identify properties or commercial or residential? And that's what you do in terms of someone reaching out to you and saying, hey, listen, I have several $1 million I want to invest in the United States. I need to know kind of and you could guide them a little bit and create the roadmap for them. I guess some people, how many people come to you, or what's the thought process, and they already know what they want to do, or do a lot of people come to you for some of the advice?
It's a bit of both. Typically, with the smaller investors, your mum and pop shop investors, they may be Australians or Canadians or people from Mexico or people from Europe. They have a couple $100,000. They may want to buy a small a couple of small turnkey properties, or they may want to buy a small apartment complex for the cash flow. So if that's the case, they typically go through the rigmarole of getting set up. The larger guys who have a couple of $1 million worth of capital typically have already got themselves set up here. They may come to me and say, look, I want to syndicate, which is where I pool investors' money together and we go take down larger assets. And the reason why I started syndicating was because when I first moved to the United States, access to capital or access to financing was non-existent because I was in the bank's eyes, I had no credit, right? I couldn't borrow from them. So having a vehicle like syndication where Reed Goossens and RSM Property Group, we bring the capital to the table, the debt, and we bring the deal, and investors bring the equity, then we get to partner on that deal and we get to share in the cash flow and share in the profits and take down larger deals. So that's one option that they have. If they want to go out and do their own, if they want to buy their own deals, that's fine, and I will also advise them on how they can do that and what types of debt financing is available depending on their net worth. Because if you're a high net worth individual, there's some bigger banks out there like Goldman Sachs and HSBC that will lend on your portfolio in a foreign country, but you have to be worth a certain amount of money and you have to bring a certain amount of capital into the United States. There are other options that smaller investors can use in terms of financing, and some lenders do lend to foreign investors, but at a bit of a higher interest rate than what I have access to because I live and work here in the United States and I have credit. So depending on their scenario and what their investment goals are, I can guide them whether it be into an investment that I have or into another investment they've already identified, but they just need help getting set up the A to Z before they pull the trigger. Very
good. What are the percentage, Reed, on what you're seeing right now, or investors interested in commercial versus residential versus development? I know there's a little bit of everything going on. Is there a little bit of mix of all, or do you see a certain trend going in one direction or another, or does it just depend on the mindset and the philosophy of the investor?
Yeah, it's a little bit of both, Joe. Mindset, definitely. The more sophisticated the investor is, typically, i.e. the larger the investor, so if they have $500,000 or $1 million, they're a little bit more sophisticated. They know what they want, and they want cash flow. The smaller investors do want cash flow, but they may not know about commercial real estate, or they may not know. They just see these turnkey properties that they can buy for $50,000 and they apparently can rent out for $1,000, and that's all well and good. And I cut my teeth on those things when I first moved to the United States. But in terms of wealth preservation, I don't invest in those types of assets. I invest in the commercial stuff, the commercial side, and some ground-up construction. So it really depends, horses for courses. It depends on what they're educated on.
Right. And are you seeing geographically, kind of talk a little bit about, and maybe again it's all over the map, are you seeing certain interests in certain sectors or part of the United States, as whether it be Midwest or the South in Florida or in California, or there's all these different philosophies. There's for instance, a lot of people here that live here in the Bay Area are really looking to invest outside of California just for cash flow and just because it's so expensive here. What are you seeing from your perspective with the international investors coming into the United States? What areas are you seeing that activity go in?
Yeah, as I'm sure you know, Joe, living in the Bay Area, there's a lot of international investors buying in what I like to call tier one cities. The San Franciscos, the LAs, the New Yorks, the Miamis, where they just want to park their capital. However, there are some more investors that I'm seeing that are becoming switched on to the whole tier two investment strategy, where you go into, say, the Dallas-Fort Worth, or the Houston, Texas, or Columbus, Ohio's, or St. Louis, Missouri's, places of the United States, and be able to capitalize on back when I was talking at the beginning about controlling the asset and buying a large 250 or 300 unit property, and then living off that cash flow and tweaking it and increasing the value through forced appreciation. So it's a little bit of both. And again, it goes back to my comment before of how educated are they when they first reach out to me and say, hey, Reed, I want to start investing in the United States. My first question to them is, what do you know about the United States? What do you want from your investment? Is it just to park your money, or is it to actually make it work for you? So depending on that answer, I can gauge where they are in their investment cycle investment psyche. So yeah.
Very good. Well, we're running out of time here. Unfortunately, we could go on, but we'll have you back, Reed, from time to time. It's just great to get the insight and information on your expertise and really taking this to a global market. That's what we're really talking about today, and that's what's exciting to get this information out to our listeners. And be sure, by the way, before we check out today, to take the podcast and share it with your friends, coworkers, neighbors. Let them know, because this is information that is valuable. And education, as we say, is very powerful. And what Reed has provided with us today will help someone out there, I know, and we don't know how many for sure. So before we leave, Reed, again, let our listeners know how they could reach you, best way to do that.
Sure thing. Well, I've actually got a free gift for your listeners if you
wonderful.
don't mind.
Okay.
It's a little bit more for the advanced investors, but if people want to start raising capital and syndicating, I've just pulled together a little ebook on how to start personal branding. So if anyone does want, it's a free 7-page ebook. If you want that, just send me an email at info@rsnpropertygroup.com and just put in their free ebook, and I'll shoot you the PDF. And yeah, hopefully you get some value out of it. That's
great. Well, thank you so much, Reed. It's been a wealth of knowledge as usual, and we will have you back again a little later on to maybe after the first of the year, as things wind into late January or February, once the new president's in place, and we'll kind of figure out where, as the dust settles, so to speak, get your opinion for the outlook of 2017.
Awesome. Sounds great, man. Looking forward to it.
All right. Take care, my friend. Thanks again for spending some time with us today.
Cheers, buddy.
This is Joe Cucchiara with Real Estate Radio Live. Thanks again for listening and tuning in. For more information, go to reradiolive.com. Take care until next time.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Subscribe to our podcast. Discover more at reradiolive.com.